Bitcoin was designed to be decentralized, independent from fiat currency, kind of its own thing, but I guess we are learning that maybe it's not as decoupled as some had thought or some had hoped. It does appear to be moving with the overall market. Do you expect that to continue, or will Bitcoin ultimately do its own thing?
Well, I think Bitcoin definitely has elements of a number of different assets, some which are designed to be more anti-correlated to the market and some which aren't. So unlike something like gold, which maybe is a little more one-dimensional, sure, you can melt it down for jewelry, but that's not why people own gold. Gold is kind of one-dimensional in its commodity nature. Bitcoin has elements of a commodity and fixed and issuance, elements of a currency. Anybody can use it for payments. Nobody controls it. And elements of a technology and a technology stock. Buying Bitcoin is almost like an equity type investment. And I think we're seeing the latter piece play out. Really, though, the lack of decoupling is a result of, I think, the broader adoption, particularly on the institutional side, because now there are a lot of institutions that are participants in both the macro market, the S&P, the NASDAQ, as well as Bitcoin, as well as VIX and currencies and commodities. And so when they're trading a lot of these things together, and that's going to flow into Bitcoin and into those flows. And so that's not necessarily a bad thing, but it does definitely impact the short-term price moves more than one might expect as compared to some of the long-term trends that we see.
And Juthica, I'm not going to call Bitcoin new. It's actually been around for more than a decade. It's new to a lot of our viewers and investors, but for those who have been deep in the markets, it's been there for a long time. But it is still new enough to have not seen an inflationary environment, which, by the way, goes to a lot of people on Wall Street as well. So is this kind of Bitcoin and other cryptos learning curve through this first bout of serious inflation? And if so, how do you kind of see it playing out?
Yeah, it is. I mean, as you mentioned, Bitcoin is still fairly new. It's also still fairly low in terms of market cap. If you look at it, Bitcoin's well under $1 trillion market cap. That's the size of one large stock. And so if you start to think about it as an asset that would be on a global and macro scale, it's still very early and it's still very small. And so I would say a lot of people in the Bitcoin space were kind of surprised in terms of how Bitcoin did behave on this sell-off in the market and how correlated it was. And so I think we're learning not just the fundamental, the inflation side, what it looks like in an environment with rates rising, but also what it looks like with this more diverse participant base and active traders who are trading in and out of it based on where the opportunity lies.
Yeah, really kind of a crazy world. I mean, with inflation and watching Bitcoin, how much of this, though, Juthica, is just sort of the, I don't want to call them paper hands, I'll get added, whatever, but just people that maybe were using leverage, things moved down, they got called out, margin call, or just had to sell to raise cash. How much of this recent weakness do you think is perhaps leverage related, options related, and that the diamond hands, the long-term hodlers, they're still there? Who's selling? Who's buying?
Right. Well, so I think a lot of the leverage has really been flushed out over the last year or so. So it's actually not, I would say this most recent tick down is not leverage related. The demand probably falls into three different categories. So the first are the ones that you alluded to, the long-term holders, hodlers. They're kind of all invested. They're not going anywhere. They also have already allocated all of their capital. So they don't really have a lot of fresh powder on the sidelines, but they're diamond hands, in it for the long term and really have been hardened over multiple bear markets. So to them, this correction is not that big of a deal. I would say the second category are some of the institutions that are starting to work their way into Bitcoin as an element of their portfolio as a diversified asset, substituting the traditional commodities, gold, with Bitcoin instead. And so they do have cash on the sideline. They're maybe doing some variation of dollar cost averaging, but I would say they're being more opportunistic in terms of buying dips, in terms of where they want to allocate. And I would say the recent correction has probably led them to be more patient. Let's wait till after March. Let's see what the Fed does. Let's see how the market reacts. And we can always deploy capital later, even if that means at slightly higher levels. And then the last piece are really the more active traders. They're rebalancing portfolios. They're looking for opportunities. And I think that between the volatility in the market and a little bit of the self-fulfilling prophecy of Bitcoin moving with the market has led some of the flows out of crypto into other assets that are more potentially more inflation hedges.